Good morning, everybody. It's great to be back at my fourth Bitcoin for Corporations conference. I'm the founder of River. At River, we make it easy for individuals and businesses to buy, sell, and use Bitcoin. And this morning, I'm going to present some data that our team has put together, synthesizing both public data and proprietary data that we have at River to go over Bitcoin adoption trends from 2025 through the beginning of this year. As you've probably noticed, we're in a bit of a bear market. The Bitcoin price is down about 40% since the beginning of 2025. But this is one bear market of many in Bitcoin's history. And it's one of the smaller ones. We've been through many before, and we'll be through more in the future. But this bear market is unique. It's actually very different when we look at the data. And what's unique about this bear market, it is the first bear market in Bitcoin's history where we are seeing an acceleration in the institutional adoption of Bitcoin. If we look at who's purchased Bitcoin in 2025, it's overwhelmingly institutions. Businesses, funds, and governments have been net accumulators of Bitcoin in 2025, and they've purchased this Bitcoin from individuals who have been the net sellers. And if we look at this trend over time, we see something pretty interesting. Bitcoin's ownership was overwhelmingly dominated by individuals in the first half of its life. And around 2020, around the time Michael Saylor and MicroStrategy started opening the eyes of institutions, businesses and other institutions started buying Bitcoin, and this trend has continued to accelerate. So this chart shows the proportion of Bitcoin owned by individuals and businesses. And if we extrapolate the change in ownership from 2025 linearly out into the future, which may or may not be valid, but it's an interesting exercise, we see that by 2035, half of Bitcoin might be owned by institutions. And this is driven in large part by the popularity of Bitcoin now on Wall Street. Over 60% of top US banks are building Bitcoin products. Citi, Bank of America, PNC. Over half of top US hedge funds have Bitcoin allocations. And 90% of the top RIAs in the country have Bitcoin allocations. In the last 2 years, 2,000 investment advisors have made Bitcoin allocations. So if we step back, we can see the impact of the institutional arrival on Bitcoin by breaking out capital inflows during the different market cycles that we've seen over the years. In the 2015 to 2018 market cycle, the capital inflows to Bitcoin were almost entirely individual driven. In the 2018 to 2021 market cycle, again, this was a lot of individuals buying their first Bitcoin, and some institutions starting to enter the market. And in this last market cycle, it was overwhelmingly driven by institutions, and we can see this based on the magnitude of capital that entered the market. Now, a chunk of this capital is from registered investment advisors, RIAs. And an interesting trend here is, in the last 2 years, every single quarter has seen an increase in the amount of Bitcoin held by RIAs. But the percentage of Bitcoin held by investment advisors is still a tiny, tiny, tiny fraction of all of the investments that they manage. So only 0.006% of assets managed by investment advisors is allocated to Bitcoin. But the top investment advisors in the country are recommending often single-digit percentage allocations, with Fidelity recommending up to 5% allocations. So I expect capital inflows from RIAs to continue to accelerate over the coming years. Businesses have also been a major factor in the capital inflows to Bitcoin in this market cycle. In 2025, during a down market, we saw record business inflows into Bitcoin, which is pretty remarkable. And these inflows dwarf any inflows from previous years from businesses. And these inflows have been dominated by a lot of treasury companies accumulating Bitcoin, a lot of people you've heard from yesterday and who you'll hear from today. But a very interesting trend is that we are seeing a very steady growth in conventional businesses accumulating Bitcoin as well. Another interesting trend is the amount of merchants accepting Bitcoin payments. We've seen a very steady growth here and an acceleration since Square unlocked Bitcoin payments in their merchant product. In our own data at River, we saw a more than doubling of our business client base last year. We serve a lot of small and medium-sized businesses, real companies, real Main Street businesses accumulating Bitcoin. And you can see a breakdown here. We serve anyone from churches to trucking companies, farms, One of my favorite ones is a hot dog stand. And the trend here is that despite the Bitcoin downturn, we've continued to see very strong growth. And something that these businesses have in common is that they're typically controlled by one or a small number of people who are just key decision makers in this business. They themselves are Bitcoiners, and they've decided to make this allocation for their company. And we've surveyed these business owners. 63% of them plan to hold Bitcoin indefinitely, which I think is pretty remarkable. These are real operating business owners buying Bitcoin to preserve the wealth of their business for the long term with no plans to sell. So in summary, the data we're seeing is very promising. I think this market downturn is temporary, and I think the next market cycle is going to continue to be overwhelmingly driven by institutional adoption of Bitcoin, both operating companies and investment assets that are still yet to be allocated to Bitcoin. And I want to leave you with an interesting graphic. This globe here is a visualization of all merchants around the world who accept Bitcoin. And I expect that next year, this slide will shine a lot brighter. So I want to thank everybody, and I'll see you next year.